Of course, a business has to know its costs, revenue and profit. First, we will start by telling you something about the costs of production in general. There exist the fixed costs, the variable costs, the long run of a business, the short run, the direct costs and the indirect costs. But you will hear something about these points in the next few minutes.
First, there are the fixed costs. Fixed costs always stay at the same level. It doesn't matter how much a business produces. As you can see here, fixed costs are a horizontal line. We always use the example of a local bakery. So it doesn't matter how many cakes the bakery produces, the fixed costs, so for example the insurance, stay the same. But fixed costs can also rise. If, for example, the bakery wants to produce more cakes, they also have to buy new machines, and so the fixed costs will rise.
Next, the variable and the semi-variable costs. Variable costs are costs which increase if the bakery produces more cakes. So, as you can see here, if the bakery produces 300 cakes, the costs are about 600 euros. And if the bakery doesn't produce any cake, the costs are 0. And the semi-variable costs are, for example, the telephone charge. The telephone charge consists of fixed costs and the variable costs. And the variable costs change from the number of phone calls the bakery makes.
Next, there are the total costs. If you add the fixed costs with the variable costs, you have the total costs. The total cost depends on the output. As you can see here, our bakery has fixed costs in the amount of 400 euros. If the bakery produces no cakes, the total costs are 400 euros. But if the bakery, for example, produces 600 cakes, you have to add the variable costs per cake. And so you have total costs of 1,600 euros. Next, the average cost. The average cost is the cost per unit. So, how many euros the bakery has to pay for every cake. The formula is easy. There are 3 different types. Either you want to have the total costs per unit, so you take the total costs and divide it by the output. Or you want to have the fixed costs per unit, so you take the fixed costs as a dividend. Or the variable costs. So, variable costs divided with the output.
The total revenue. The total revenue is the amount of money a business earns from selling its product. So in the example of our bakery, we sell 3 cakes at the price of 2 euros. And so the total revenue of the bakery is 6 euros.
Next, profit and loss. Why do businesses calculate their costs and their revenues? The main reason is because then they can calculate their profit or their loss. The formula is easy. Total revenue minus total costs. If the total revenue is higher than the total costs, you have a profit. If the costs are higher, you have a loss.